Welcome back. So the takeover of Silicon Valley Bank and the financial institutions that involve some of the problems we saw this past week, that hasn't gone away. Joining us now is Brad Sherman, member of the U.S. House of Representatives, Democrat from Sherman Oaks. He's also a member of the House Committee on Financial Services, formerly called the Banking Committee. So, Congressman Sherman, let me ask you, on Wednesday, there's going to be a vote or a decision by the Federal Reserve regarding interest rates. They've been raising interest rates to fight inflation. If they decide not to, is there a potential that could be seen as a real concern about the stability of our financial institutions, and that in and of itself could force a run on the bank? That is, people will start withdrawing money, especially from the mid-sized banks, and to put them in the larger banks, that you could see more banks fail.
I don't think so, but I think they'll do a quarter of a point. Before this all broke, everybody thought they'd do half a point. So I think they will increase interest rates a little bit, the kind of the minimum increment.
Right, but even if they just if they raise it just part of what they just half of what they were intending to do, could that not be seen as hey, they know there's trouble?
I think that even if you weren't focused at all about the health of the banking system, inflation is down below what it would otherwise be as a result of what's happened. We see that interest rates on the 10-year Treasury bond are down. We see the market is down. We see people pulling back a little bit, particularly businesses. So clearly the Silicon Valley Bank thing has had an effect on the economy. And if you're just choosing interest rates for the economy, you would do a little less than you would otherwise.
Is there a possibility that we're starting to see the slow unraveling of the mid-sized bank, such as Silicon Valley Bank, regional banks, that people are going to start saying, listen, I'm going to invest more in the big four banks, big five, trillions of dollars in assets. That's where my money's safe. And we're going to end up with just a few banks.
I don't think that will happen. If it is a possibility that it will happen, we might move to a different system where the FDIC insurance is the entirety of your deposit. Now, that would be expensive in that we would have to assess a bigger insurance cost on every bank. But I don't think we want to be in a circumstance where there are only 5, 6 big banks in the country.
So you're not a big fan of bank mergers?
Well, if somebody wants to take over Silicon Valley Bank in a merger today, I'm all for it. But in general, I'm not in favor of us eliminating the whole regional banking sector.
Democrat Brad Sherman of Sherman Oaks, member of the House Committee on Financial Services. Thank you very much for taking the time.
Thank you. Thanks a lot. Anytime.
We'll have some fun.